What is happening, Bulls and Bears? We are back with another dose of economic. Maybe I shouldn't say it this episode. Is this reality? The nightmare begins in July. It's what many people are saying. Many people that watch the financial markets, that pay attention to the financial news, and that dive into how the economy is engineered, basically. So the Fed Now payment system comes out in July. Here's a CNBC article. Let me put that up right now. Is this the foundation? And I'm not saying this is the digital currency that people have been talking about, the central bank digital currency, but is this the foundation? Is this one of the components of this digital system that people are talking about that is coming with the digital currency? Now we know that right now most transactions that are done are digitally, right? Most people that make purchases and transactions in the market, buying and selling, are not bringing out their wallets with their coins and their dollar bills. It's mostly digital now. But that's not what we're talking about. We're talking about a whole new financial system that's going to be controlled and more heavily watched, for lack of a better term. And it's going to have a lot more controls on it, meaning controls how you're able to spend your money, how much you're able to spend, what you're able to spend it on, greater abilities for authorities to shut you off completely. We've just looked at the news over the past couple of years, and you could see a lot of cases throughout the world where people were shut down or locked out of their money, which is not really their money. So we've seen cases of this. So it's not completely wacky to think that this could be, again, the component for this next financial system that they're bringing in. Now, on the surface, this sounds like a good thing when you just read the news that's coming out about it. Let's just take a look at the CNBC article. Fed Now, the Federal Reserve's digital payment system, there it is, digital, will debut in July. The system will allow bill payments, money transfers, and other consumer activities to move more rapidly and at lower cost. So we've all had transactions where you deposit a check and it's not available, the check has to clear, or something else where you're waiting for your money. I remember one time I made a double payment on my car insurance. And I was like, hey, I made a double payment. Can I have the money back? I need it for something else. This is like many years ago. And they said, oh, we have to wait this many days. We have to wait for clearing, and then we'll send it back. It could take 3 more days after that. I'm talking about 8 days just to get my money back. Well, I sent it to you, and now I got to wait 8 days to get it back. So that's just an example of the slowness we've seen in some sort of certain types of transactions. Well, this is supposedly going to be much quicker and faster. That's the way it's being pitched. That's what's being said. So it's going to be a good thing, right? Here's a little more over on this. The system will allow bill payments, money transfers such as paychecks and disbursements from the government, as well as a host of other consumer activities to move more rapidly and at lower cost. Well, we know now that businesses have to pay for each credit card swipe, and some businesses will even charge you extra if you use a credit card. A place that we go get haircuts at charges $1 if you use a credit card. So therefore, people go to their ATM and bring cash in there because they don't want to pay that extra fee. So will this get rid of that fee? Is that one of the good features of this new system that's going to be beginning in July? Please let me know what you think down in the comments. This is one that I honestly have to say, I don't know exactly if this is going to be the component for this new digital currency that so many people are concerned about. Well, I should say many people are concerned about it. Other people agree with the way it's being put out in the news, that it's going to be a good thing. It's going to be faster. It's going to be more efficient and at lower cost, right? So it's about 50-50 as far as the divide amongst the people that I see talking about this. One of the other good features of this payment system is supposed to be better fraud detection. And I'll just read you this here. FedNow was announced in 2019 and will provide round-the-clock real-time gross settlement by funneling commercial bank money from a sender through a Fed credit account to its recipient. It also has built-in features such as fraud risk management. All right, so I would really like to hear your opinion on that down in the comments of this channel. Now let's move on to some other news here. Now we know that with the levels of debt right now and the cost of living and wages not keeping up with the cost of living, that a lot of people are living paycheck to paycheck. The numbers come out different surveys between 60 and 70%. Here's another one today, put out by CNBC. The article is out of CNBC. This is according to a recent report here. 62% of Americans living paycheck to paycheck. More people have a side job. So I pulled up some other articles on this. This one's out of payments.com. Paycheck to paycheck population may surge as SNAP benefits end and student loan repayments resume. Could you imagine both of those things happening at the same time, where the students have to resume making their student loan payments, and the ending of these extra benefits that people began getting back in 2020? That would be a disaster. And this article points out, you could see the percent of the population living paycheck to paycheck surge as a result of this. Also, out of Go Banking Rates, side gigs 2023, 50% of Americans have a side hustle, even people that are earning $100,000. This is not me making stuff up. This is not me just trying to make things sound bad. That is the headline. I'll even put it up here. Americans are doubling up on work at an astounding rate. As Go Banking Rates reported in November, about 38% of the people said they have at least one side gig, and an equal share noted that they have more than one. So total, it's about 50%. Amazing. Bloomberg reports that due to record high inflation and the dwindling of pandemic era savings and tax credits, many workers simply need the extra wages to make ends meet. So this doesn't end very well when you have record numbers of people right now with $1,000 a month plus car payments, or $1,000 plus a month car payments. A new report out of LinkedIn citing a survey by Lending Club and Payments.com. It's now estimated that more than 50% of adults have at least one side gig, and it's not just the middle class. It's also including the people that are making $100,000 or more. I know a lot of people that are making more than $100,000 here in California, and they're not in the position they'd like to be. For example, many of them are still renting, and many of them are concerned about their budgets. And you could say move out of California. Well, wages in states other than California are typically lower. I remember when I moved out here about 20 years ago now, I was really surprised how much more I made just getting an entry-level job versus what I was making back in Michigan. And that's when I didn't have a degree in college. Now I have a college degree. That helps a little bit. But overall, California does have higher wages. Are the wages higher enough to keep up with the higher cost of living? Or I should rephrase that. Are the wages in California high enough to compensate for how much more expensive California is compared to other states? Well, no, I don't think so. I think the cost of living out here compared to other states is much more. And yes, the wages are higher than other states. But personally, just from what I've seen and experienced, I don't think it makes up for the difference. And that's why you see, a lot of people out here in California carrying a lot of debt. All right, let's move on here to some other news and another forecast that to me doesn't sound so insane. It sounds like pretty realistic stuff here. World Bank warns of lost economic decade as turmoil spreads. And I'm not making up these words. These are the words from the article. Quote, and this is a quote: "A lost decade could be in the making for the global economy," unquote. The chief economist over at the World Bank, senior vice president for development and economics, warned in a new report. And more quotes here from this report: "Nearly all economic forces that powered prosperity over the past 3 decades are fading. As a result, between 2022 and 2030, average global potential GDP growth is expected to decline." Well, let's see. The reason it's probably peaked is because the bubbles are about as inflated as they can get. Can you imagine the housing bubble getting any more insane before they finally decided to raise interest rates? Also, let's talk about the cost of many items that we buy. Let's talk about cars. Used car prices went up again as of the last report, as of February. There's a shortage of vehicles. We're told that there's a shortage of inventory of homes. There's a home shortage. and therefore prices aren't falling near as fast as many people predicted. In fact, if you look at the Case-Shiller Home Price Index, which just came out for January, it lags a couple months. Prices are only down in the 20 cities that are tracked in that index. Prices are only down by about 3% year over year. 3%, that's all. I don't know about you, but I know a lot of people that predicted a housing market crash starting over a year ago. And this 3% drop in prices sound like a crash to you? Well, it doesn't sound like a crash to me. So yes, prices are not coming down nearly as fast as what people had expected. And there is this shortage happening right now. I drove by a car dealer the other day. It was about half full, and it was a Toyota dealer, and they sell new and used cars. So what I've heard from a few different sources is that people are holding on to their used cars for longer, and therefore there's less used cars on the market. But if there's less used cars for sale, that would force people to buy new cars or make new cars more attractive, because if the price of used cars is going up, more people are going to be looking at new cars. So do I see a lost decade like it's being predicted here out of this study? Well, it depends on what you mean by lost. I think it's going to be much more difficult in the next 10 years versus the previous 10 years, because it was easy to borrow money to live beyond your means. And if banks start tightening up, it's going to be much more difficult, one, to qualify for a loan, but two, with interest rates high, everything is going to cost more. Even if prices do come down even more, the cost to carry these items, to finance these items, is going to be higher. So who's going to win in the end? It's going to be people with cash, people that are not dependent on financing, people that are not going to be affected by higher interest rates. Why? Because they're not borrowing money. In fact, if you have cash, you can now park it somewhere and get maybe even 4% on your money sitting there. Even one of my stock accounts, Robinhood, for example, gives you 4% on your cash if it's not invested, if it's just sitting there. So cash is looking more, it's becoming more attractive right now. So hopefully we don't see emergency rate cuts, which I think is very likely, because every time we've seen an economic downturn before, every time they went ahead and cut rates. This time could be different. People say that this time is different. It is different on one hand. It's a lot worse. But is it different where they're going to keep rates elevated instead of cutting rates like they've done every time in the past when we've seen an economic downturn? So again, something else that's yet to be seen. Prepare yourself either way. Thanks everybody for watching this report today. Please give me a thumbs up if you like what we talk about, and don't forget to hit that subscribe button. The analytics is telling me that only about half of the people that watch my videos are actually subscribed. So do me a huge favor, please, and subscribe if you're not already, and come back for more updates. We're going to keep on top of the latest breaking financial economic news for you, and help us protect your money, my money, our money. Thanks everybody for being here. Bye now. Peace.